Welcome, MMTs. We just put this on a new operating system, so I don't know if it's going to work or not. But Google had a 3-6 breakout. They slid half that bar right here, that market maker gap down below the bar, coming back and testing that 3-6 breakout bar. And we'll update you. That meant that there was price failure right then and there. And that's called slide that bid. Here we go right now. I'm going to show people here. Look, we can always add to this position if we can hold the high of this last 3-6 breakout bar with positive price action. So we're going to monitor that, and then what we would do is we'd come over here and we'd add 5 more. And we'd take our share count, contract count, up from position of 10 to 15. Okay? However, price action has to hold here. If it doesn't, I have no business adding to the position. So half of this up bar right here is going to be resistance at the current position price print. Time 8:26 a.m. Pacific Standard Time, with half of the SMF bar right here is the upper end of that resistance, where the market maker gapped the price below it. And the market makers, the people in here on the bid and the ask. Okay. So we change our exit order. And if we're going to change the exit order to a higher price, $21.50 is our exit order on this one for now. But in order for that, and if that is going to happen, we have to have the evidence here in the 3-minute bar. And that price action is not taken out half of that bar. You want this to be green, and you want it to build right above that price action bar for the new MMTs. Right now, these 50 cents, 54 pennies, $1.40, 97 pennies, 82 pennies, 48 pennies. That's what each one of these bars are worth right here, and that means in both directions. But you can see here that there was a $1.40 bar 3 bars ago, and that was off of that high down here. So basically what we need to see happen is that price action builds and breaks out these highs. And until that does happen, well, then obviously there isn't any reason for us to add to the position. But we know that the low was 17.70 and holding. So what we'll do is we're going to undercut that bid, 17.50, just to have another order out there, 20 pennies below the market with a buy, just in case something was to happen in the market. You never know. So here, let's use a different market maker. Let's go to someone else so we can have 2 orders. Let's go to PHS. Let's see who's taking the first order. That first order out is this one. Okay, so that one, all right, 10 at 21.50 on CBO. So in order to get it to go out on we got to cross it. So let's go to another exchange. Let's go to PHS, which we are. And at 17.5, let's just keep a bid down there. That way we can work 2 markets by using 2 different markets in the option. So I'm out to sell on CBO, but I'm also out to buy on PHS at 17.5 and hit OK. That way I can be below the market and above the market. Below to buy more and above to sell. And it's all going to be based on this price action, and it's lunchtime. Well, it's 8:30. We've been open 2 hours, 2 60-minute bars. But we're looking at this 3-minute breakout, and we're looking at the current price action that's going to populate the actual option, higher or lower. In the equity name itself, what you want to see happen on this level 2 in the bid and ask is where this side of the market right here, these are the people that are willing to sell the name. That this side of the market isn't really willing to sell, but they jump over here and then the price breaks out and goes higher. And understanding the level 2, the level 2 in here is the price print, 28 by 53. Now it's 28, the bid by the ask is 60. 60 over here out is the seller, and the bidder, it remains on this side here of the equity. And what you want to see is where they prop the equity higher, or they've been sliding the bid one time here and a secondary time right here. So what you want to see is where this side of the market ends up in front of all these bids, and pop goes the stock in price action. That's one of the things about mastering this level 2. 68 showed. I got a 66. 60. That's that whole side of the market right there. MMTs that we just talked about moments ago that you've seen there. What were they? Were they really the seller? Obviously not. And this is the power of the execution of the level 2 direct access trading platform. Here we are, live price action, narrow range, 3-minute bar, ascending, no power behind it to make it a breakout because this upper trend line is still in play, MMTs. Some of the things, and I'm sorry I don't have the platform up today for everyone. That's because we have to reinstall it on the new operating system, and there's some kind of controls in there, I guess, called administrator rights or something that have to be addressed. But nonetheless, what I want people to see is this is the upper trend line. There's your 3, shallow 3 with the sell wick, but guess what? You took out that, you stayed above that previous right shoulder, the left did, in price action, the body of it. And right now your narrow range at the top, what you want to see is a big fat green bar that would validate just like it just did right there, but a big fat one. And that would take the print back up and break that high right here, and that will take these contracts up. And I just now brought the video on. The time on that bar right now is 9:04 a.m., 12:04 in New York. And he's coming up there, and something's going to have to push that thing through now. And what you want is huge, huge buy bar. But you're building, once again, here is the left shoulder above the previous right shoulder. The body is so far, but you need to see the body in the price action here, just like it would do in your SMF platform build. And you need to close above that trend line. That's the same one I showed earlier in the tape, MMTs. And you need to consolidate above it. And then price action needs to go up to 627.72 pennies. 627.72 pennies. SMF MMTs in the lighter part of the beginning lunch hour on Wall Street. Out in action. Here we go right now, up above that 3 bar, up above that trend line, everything that I said here and now. There's the extension of that. There's that big price action. You broke that intraday high. Time, 9:08 a.m. Pacific Standard Time. The value of the call, the 610 call will raise in value. You need to see how those bars stay above them previous bars on a 1, 2, 3, 4, 5 times 3 SMF ascending breakout price action intraday. All right,
88%.
Ken Flag, you can see that distribution bar. You're sliding half of that bar right there. There's the peak of that breakout, and there's that next high at 627.29 pennies. And you got the SMF Pro Action slide that bid. Half of that bar's in play right there on this 3-minute beginning bar. It's got to close back above half of that bar. MMTs. So here, let's get down to the price action. Once again, it can't be below half of this MMT. Here, I can't get it just perfect, but that's close enough. And this price action bar, that's that breakout of them 5 bars right there. And you find, but you didn't have any continuation price action. And what has to happen, MMTs, is that you slid almost a teeny off the highs. in that slide, the bid, there's your breakout. There's your entry. This is how the price of the option moves up. There's 50 cents wide, 19.15 by 20. This is where they're stealing the most because this call is deep in the money. And the last previous highs on it was $24 a contract. The way that that could ever go higher is that we need those breakout bars. And you don't need this bar. It's above half. The body's above half of it, but now it's below it. And this is live tick by tick, MMT, on how to sell out at the high if you need to. But 60 pennies wide means I'm a buyer below this market in the options as I'm watching the equity side as what they do here. I'm also a role player over here, MMTs. You see that 40 cents between 19, oh, now it's 50 cents wide, 50 by 20. We own it down here at $19, and I could be king and put it out at $19.90 right now. It just depends on this bar. Okay, I need to see this price action up here. This was a shallow lunch hour, late day price action breakout to the 627.29 dot ratio high. So the accumulative effect was 623.13 up to that. Do the math, MMTs, and that's that move there. Relative that at that low, we put 17.70 in the options low entry, and it's up a little over $2 right now. When they shot that bid down there, they stole that premium off on this side, got it down. Now they've walked that equity up. The problem I'm having, MMTs, is I need to see some fat green distribution bars to break that high. And you can see it's 0.1 by 21 pennies here in the level 2 MMTs. So once again, are they sellers like I showed earlier on the tape, or do they take out the bid and start walking it up in the breakout? You'll see it in that 3-minute continuation bar as to what the market maker would be doing and how they're going to try to, someone's going to roll that one way or the other. MMT. Let's take a look at that pro action bar. There's another narrow range one that's just coming up. That's a failure action bar. Below half of that last 3, 6, 9, 12, 15 breakout ascending failure at price action. Failure at price action. Ken Flag, MMT, 91 by 08 pennies. You've got to get that one to come up. You got to see this side of the market do a bid pop over here and walk that price bar up.
Sure, sure. Yeah, we have to keep in mind. Yeah, keeping